Hello students. In last video lecture, we have seen problem number 5 of holding and subsidiary company. That is how to prepare consolidated financial statement. Now in this video lecture, we will solve problem number 6. In this problem number 6, we will see different type of adjustment. The most important adjustment which we will be solving in this problem will be related to debentures. So to start with this problem, first let us understand what are debentures. Debentures are basically issued by one company to raise capital. So in this problem, we have to see whenever debentures are being issued by holding or subsidiary company, what will be the treatment of these debentures while preparing consolidated financial statement. So let us start with this problem. So in this problem, balance sheet is given as on 31st December 2017 of H Limited and S Limited. Before analyzing the balance sheet, we have to first analyze which is the holding company and which is the subsidiary company. To identify which is holding and which is subsidiary company, we have to first see in non-current investment. In non-current investment, it is mentioned that H Limited is having shares in S Limited, 1,500 shares, and H Limited have paid 1,80,000 rupees for 1,500 shares, which clearly means that H Limited is holding S Limited, okay, by having 1,500 shares in S Limited. We have to also see how many shares S Limited is having. If you see 2 lakhs amount of share capital is given and 100 is the value of each share. So they are having 2,000 shares. Out of these 2,000 shares, 1,500 is being taken by H Limited. So in simple manner, H Limited is holding S Limited. Now I have already stated that this problem deals with debenture. So in non-current liability, S Limited is having 12% debenture issued to the public of rupees 100 each. 1 lakh is the value. So 1 lakh divided by 100, which simply means that S Limited have issued to public 1000 shares. The value is 100 each. So we will see in non-current investment, 12% debentures, H Limited is having 400 debentures of S Limited. Value is 36,000. Okay. At rupees 90 each, basically means that 100 rupees debenture they have taken for 90 each. So H Limited, the value they were supposed to pay was 40,000, 400 into 100 each, but they have only paid 36,000. So they are getting a discount of 4,000 rupees. So we need to see how this 4,000 rupees treatment will take place while doing the consolidation of financial statement. Once you understood the treatment of holding and then debentures, we will now see additional information. So in additional information, it is mentioned that H Limited acquires share of S Limited. That is, H Limited is holding S Limited by having 1,500 shares. The general reserve and profit and loss account of S Limited showed a balance of rupees 30,000 and 4,000 debit. Debit basically means that last problem we have seen, debit basically means loss. S Limited have suffered a loss of 4,000. So it will come in bracket. Second additional information is that creditor of S Limited include 10,000 rupees, for goods supplied by H Limited. So H Limited have supplied goods to S Limited. So in books of S Limited will be debtor, and in books of S Limited is creditor. So H Limited is supposed to pay H Limited 10,000 rupees for goods supply. But since this is an intercompany transaction, we need to see what will be the treatment of this rupees 10,000. We will see this while preparing the working notes. In, in continuation of this adjustment, they are mentioning that H Limited had charged 20% profit on this sale. 10,000 they have charged 20% sale. So half of the goods were still unsold on 31st December 2017. Out of this 10,000, 5,000 stock was still lying in the godown. So whatever profit is there, the treatment has to be given. That is on 5,000, profit of 20%, that is 1,000 profit, adjustment has to be done. We have already seen this kind of adjustment in previous problem. Same adjustment will be given effect in this problem. So next adjustment is bills accepted by H Limited were in favor of H Limited. So bills receivable and bills payable adjustment also we need to see. And last one is plant and machinery were overvalued by rupees 20,000. This simply means that there was overvaluation of asset. So there is a revaluation loss that has to be given effect for. Now let us start with the solution. Okay. So balance sheet of H Limited and subsidiary H Limited is given, consolidated balance sheet. Along with this balance sheet, I have already given you notes to account. So in this problem, I will just show you how to prepare the working notes, how we will get this different figures. That is how we are getting 67,500. I will show you the working notes of all this adjustment. Here, if you see there, important adjustment is the debentures. Debentures is very important adjustment that has to be given effect. So if you see this, long-term borrowing, S Limited were having 1 lakh rupees debentures given to the public. Out of this, 40,000 was held by the company that is holding. So only 60,000 will be given effect for. Whenever there is an intercompany, just like an intercompany transaction, only 60,000 will be given effect for. So this is, please keep in mind that whenever the venture question comes, in long-term borrowing, you have to give effect. Out of this 1,40,000 is being held by H Limited. Therefore, it is intercompany. Only the balance amount will come. Remaining working notes, we will discuss that now. So let us start with the working note. So solution to problem number 6. This problem basically deals with adjustment of debenture and some more adjustment. Some more adjustment basically means that revaluation of asset is there. Then profit on unsold stock, that is rupees 1,000 rupees. We will see that. And then intercompany transaction like bills receivable, bills payable, debtors creditor. These are the important adjustments which will be covered in this problem. So working notes we will prepare with the help of a diagram explanation. Before understanding diagram explanation, it is very important to calculate what is the percentage of holding and subsidiary, that is minority. Percentage of holding will be how much H Limited is holding in S Limited. So it's given in the problem that 1,500 shares is being held by H Limited in S Limited out of total of 1,000 shares. If we multiply by this 100, we will get the percentage of 75% as holding share. The balance percentage of share will be called as minority share. So this problem basically is a partial holding, and whenever partial holding is there, minority share calculation will come into picture. So now let us start with the diagrammatic explanation. So S Limited, two dates are very important: 1st January 2017 and 31st December 2017. On 1st January 2017, we need to, this is called as date of acquisition, and here on this date, cost of control will be calculated. That is, goodwill or capital reserve will be calculated. And 31st December, it's called as date of consolidation. On this date, minority interest is calculated. Since this is a partial holding, minority interest will be calculated. 1st January 2017 is the date on which H Limited has acquired S Limited. So whatever amount is paid, whether it is paid more or less, we need to take into consideration, and that has to be shown in the balance sheet. To calculate both this, we require net worth. So let us start with calculation of cost of control first. To calculate net worth, we required share capital. So share capital of S Limited as on 1st January 2017 is 2 lakh, which is given in the problem. General reserve is 30,000, which is given in the problem. Profit and loss account debit balance, which is means that on 1st January 2017, S Limited was having a loss of rupees 4,000. And to this we will add revaluation loss. In additional information, in item number 4, they have mentioned that S Limited stock is overvalued. Overvalued means by 20,000. So S Limited in asset, they are having 3,20,000 as asset. But S Limited will only acquire the value by 20,000 less. That is, out of this 3,20,000, they will only take 3 lakh rupees as the real value, and 20,000 will be the loss. For example, if suppose I am buying, or if I am buying a company, okay, my friend's company, taking over my friend's company, and if the asset is valued at 1,50,000, but I am saying that I am valuing this asset for 1,30,000. So I will take at 1,30,000. 20,000 will be the revaluation loss. In the same manner, here the revaluation loss will be shown as 20,000. That will be used for calculation of net worth. So after adding this, we will get 2,06,000 as net worth. Out of this net worth, holding will be for 75%, 2,06,000, 75% is holding. So that is for H Limited, out of this 2,06,000, 75% will go. We are not bothered about minority interest while calculating cost of control. So out of this 2,06,000, the value is 1,54,500. That is S Limited is H Limited is supposed to pay S Limited 1,54,500, but they are paying 1,80,000. So they are paying more. More basically means they are paying 25,500 more. Basically, this will be the goodwill. If less was there, that will be called as capital reserve. So after calculating this, we have to calculate minority interest. But before calculating minority interest, there is a adjustment of debentures. We will see that adjustment now. So whenever debentures are acquired by holding company on discount or premium, that is whether they are paying more or less, that amount needs to be adjusted while calculating this goodwill or capital reserve. So we know that the face value of debenture held by H Limited in S Limited was 40,000. That is, they are holding 400 shares. 100 rupees is the value, 40,000. But actual amount they paid is only 36,000. So they are getting this 40,000 debentures at a rate of 36,000, which means that they are getting it for a discount of 4,000. Whenever there is a discount or premium, that needs to be adjusted in goodwill or capital reserve. So this 4,000, it's like a profit for the holding company. So this has to be deducted from whatever calculation you are getting. Here goodwill you are getting, that needs to be deducted. If suppose this was premium, then needs to be added. So amount you will get is 21,500 as goodwill. This 21,500 will come in the balance sheet in intangible asset while preparing the consolidated balance sheet. Once you have calculated goodwill, next step is to calculate minority interest. To calculate minority interest, you need required share capital as on 31st December 2017. The share capital is same, 2 lakh rupees. Then general reserve is 40,000 rupees. You will get this from balance sheet given in the balance sheet. Then profit and loss account, they have mentioned it is as for 10,000 rupees, and revaluation loss will be same, that will be carried forward. So the amount of net worth is 2,30,000. So out of this 2,30,000, holding is 75%, but we need only required how much will go for minority as on date of 31st December 2017 while preparing the like consolidated balance sheet. Minority will take 25%. So 2,30,000 down into 25%, that is 57,500 will be minority interest. This minority interest figure will come in balance sheet in liability side under minority interest. First notes to account, then it will go to minority interest. So with this we have calculated goodwill and minority interest with the help of this chart. Now we will see whether there is a change in the full year from starting balance to closing balance. So in general reserve, the starting opening balance was 30,000. Now the opening balance is reached to 40,000, which simply means that there is increase of 10,000, that is profit of 10,000 from 1st January 2017 to 31st December 2017. That is 40,000 minus 30,000. Now we will see profit and loss account. As on 1st January 2017, S Limited was having a loss of 4,000. But at the end, that is on 31st December 2017, S Limited is having a profit of 10,000 rupees. So in middle, they have made a profit of 14,000. How 14,000 we are getting? See, starting they had a loss of 4,000. 4,000. So naturally they have made a profit in this running year of 14,000. That is 14,000 minus 4,000. You will get the answer as 10,000. So that is in full year they have made a profit of 14,000. But last year they had a loss of 4,000. So 14,000 minus last year 4,000. Closing balance is 10,000. So now you got the figure of 10,000 general reserve. This 10,000 will be distributed while preparing consolidated balance sheet working notes. 75% will be given, and out of this 14,000, 75% will be given, and revaluation loss there is no change, so nothing will be distributed. So this 14,000 profit or 10,000 general reserve increase are called as pre-acquisition profit, and that needs to be distributed in this ratio 75% and 25%. So with this proper diagrammatic explanation, now we will move to working notes which are required for notes to accounts. First one is share capital. Share capital, equity share is given as rupees 5,000. We are only taking equity share of holding company. Reserves and surplus, general reserve H limited is 60,000. S limited general reserve, we have already seen that 10,000 is the change, and out of this 10,000, 75% is holding share and only 7,500 will come. So general reserve total is 67,500. This 67,500 will be shown in notes to accounts first, then it will go to after adding in reserves and surplus balance sheet, consolidated balance sheet. Now profit and loss account H limited is rupees 30,000. S limited 14,000 was the full year profit. Out of this 14,000, 75% will be going for holding, that is for preparing consolidated balance sheet. So 40,500 is the profit. Now important adjustment will come into picture. The important adjustment is unrealized profit on stock. So in the problem it is mentioned that H limited has sold goods of 10,000 to S limited, and out of the, at the profit of 20%, and out of this 10,000, that is 50% of the stock of this 10,000 is was remaining unsold. So whenever unsold stock is remaining in godown, whatever profit is there on that unsold goods, that needs to be adjusted. So same type of adjustment we have seen in previous problem. So in this problem, the value of the goods unsold is 10,000 rupees. If you calculate 20% of the profit for the full year, profit on the stock will be 2,000 rupees. Out of this 2,000, we will only take half because only half of the stock is sold. And this 1,000 adjustment, 1,000 rupees profit adjustment needs to be given. And this 1,000 will be deducted from profit and loss account of H Limited. 30,000 we can show here or separately here. So 1,000. After removing the 1,000, 39,500 will be there in profit and loss account, and this 39,500 will come in notes to accounts, and then it will go to balance sheet. Second effect of 1,000 will be coming in stock in current asset. So moving on to the next notes to account, long-term borrowing we have already seen long-term borrowing from debentures. 1 lakh debentures, 40,000 debentures are taken by holding, and only 60,000 is shown in the outer column. Then plant and machinery, S limited 3 lakh 50,000, S limited 3 lakh 20,000. But at the time of acquisition, it was mentioned that this 3 lakh 20,000 will be on is overvalued by 20,000. So this 20,000 will be deducted. We can show the adjustment here, or separately we can show revaluation loss as 20,000. This is the second effect. And you will get the answer as 6,50,000. This figure 6,50,000 will come in notes to account, and then it will go to balance sheet. After this stock, S limited stock is 35,000. And S limited stock is 15,000. But here one more adjustment, that is unrealized profit on stock 1,000 will be deducted, and your answer will be 49,000. This will come in notes to accounts, and then it will be shown in balance sheet. Moving on to the next working note. This is very important working note, very important. So here creditors of S limited includes 10,000 for goods supplied by H limited. This is intercompany transaction. The effect needs to be nullified. So basically means that H limited has sold goods of 10,000 to S limited. Okay, half of the goods were remaining unsold. The profit adjustment we have given effect to, but now this 10,000 rupees have been sold, goods sold to H limited on credit. So in H limited will be the debtor, and in H limited will be the creditor. So this 10,000 has to be deducted from S limited creditors, and same 10,000 has to be deducted from H limited debtors. So first we will include H limited creditor 40,000, no effect will be there. But in S limited, the total debtors creditors they are having 25,000. That is, they are supposed to pay outside at 25,000 rupees. But out of this 25,000, intercompany transaction, that is, they are supposed to pay to their parent company, that is holding company, 10,000. So whenever within the company something is there that needs to be set off and nullified, and therefore the reason, that is the reason 25,000 minus 10,000 is deducted, 15,000 is shown, and total 55,000. This 50,000, 5,000 will be coming in notes to accounts, and then balance sheet. Now moving on to sundry debtors, S limited sundry debtors 60,000 is the amount is there. But out of the 60,000, 10,000 is to be supposed to be received from S limited. So this is intercompany transaction, hence amount will be 50,000, and S limited 30,000. Total is 80,000. This will be coming in notes to accounts and then balance sheet. If you see this carefully, here we are removing 10,000, same 10,000 we are removing from here, and the effect is nullified. So moving on to the next very important adjustment working note is the bills accepted by S limited were all in favor of S limited. This is intercompany transaction. The effect will be same, nullified. So in bills receivable, we will see was S Limited is supposed to receive 10,000 and S Limited was supposed to receive 8,000 rupees as bills receivable. But full 8,000 they are supposed to receive from S Limited. So intercompany transaction this is. So full 8,000 will be nullified and nothing will be shown. And 10,000 will be the total that will come in the notes to accounts and then balance sheet. And in bills payable S Limited, they are supposed to pay 12,000 rupees. Out of this 12,000, they are supposed to pay to 8,000 rupees to S Limited. So that's why it is deducted and we are only showing 4,000 in outer column. And then S Limited, they are supposed to pay 8,000. Total is 12,000. This will come in notes to account, then finally in balance sheet. So last is cash and cash equivalent. Before this, we see carefully 8,000 is deducted here and 8,000 is deducted here. So both the effects are nullified. Now moving on to the next, cash and cash equivalent. H limited is 11,000, S limited is 30,000, total is 41,000. That will come in notes to accounts and then balance sheet. And there is a small note mentioning that no information is provided about depreciation on revaluation loss. Therefore, depreciation adjustment is not taken into consideration. If something is given relating to depreciation, like we have seen in problem number 3 and as well as problem number 4, depreciation effect needs to be given, and that is very important to give the effect. But in this problem, no depreciation information is given. So with this, we have finished with problem number 6. So students, if you have any difficulty in problem number 6, you can just WhatsApp me with the problem number and what difficulty you have. Thank you very much.